Ladies and gentlemen, welcome to today's conversation. My name is Monica Kamunde, aka Magical. I change people's lives by offering financial advice and financial solutions. In our previous conversations, we have been discussing the unit trust. I deviated a bit from that in my previous conversation where we were talking about retirement planning. But today, I'd like us to resume that conversation about the unit trust. And today, ladies and gentlemen, I would like us to unpack the bond fund. But before I do that, allow me to briefly describe what a bond is before we delve into the bond fund itself. A bond, in layman's language, is simply a loan. You can invest in the bonds directly or indirectly. Directly, you can buy bonds from the government or institutions that are floating the bonds in the market. On the other hand, you can delegate that role or duty to a fund manager who then buys for you bonds and hence you invest in the bond fund. A bond fund is um, one of the funds under the unit trust or the mutual funds that invest in a portfolio of diversified government and corporate bonds. So in this case, you get a taste of various bonds that are in the market, while at the same time enjoying professional management from the fund managers. So to unpack it further, what is a government bond? A government bond, this is a borrowing avenue that the government uses to raise money or funds for its projects. So the government can borrow money locally or internationally. That's why you hear a government has borrowed money maybe from IMF or what is known to all of us, maybe China, depending on where they get they're able to get the funding. Corporate bonds are borrowing avenues used by corporates or institutions to raise money to run for various needs. It could be that they want to expand their operations, it could be just for operational use, or other things like mergers or acquisitions. So the bond fund is a fund whose objective is to grow the investor's income through interest that are paid periodically. This is a fund that is good for investors who have a time frame of over 2 years. The bond fund, in its nature, is good for investors who have a low to medium risk appetite. Remember, as we've been discussing the unit trust, various unit trust funds have various um, risk levels. For instance, we saw that the money market has a low risk. We looked at the equity fund, which we realized as a high risk. For the bond fund, it's a low to medium risk kind of a fund. So it's good for that kind of an investor whose risk appetite is low to medium. It's also a good fund for someone looking at steady, more stable income because the bond fund returns are quite stable. They are not as volatile as in the equity fund or the stock market. So if you're the kind of an investor who is looking at um, more stable returns or yields, then the bond fund becomes an ideal place to invest. So it is a fund that helps you diversify into the various bonds that are in the market, and hence it's able to diversify your risk and mitigate against risks of a single bond. So, ladies and gentlemen, if you've been thinking about investing into the bonds, you can either directly buy bonds from the market, through the government, or through the various institutions, or look for a fund manager, a trusted fund manager that you can delegate that to. Thank you for joining this conversation. Have a good day and see you in our next conversation. I still encourage you to go to the various videos that we have uploaded so that you can be able to learn more and more about all the other funds and various other discussions that we've been having therein. Thank you so much for watching. Have a blessed day. Bye bye.